All right, guys, welcome back to this week's video. I'm pretty going to talk about how I got this trade on gold yesterday, this one is to three, and how you can be able to use, smaller time frames to be able to execute certain trades like these, using ICC, obviously, which is practically price action market structure. And the words ICC is indication correction uh, continuation, which is were known as breakout, retest, and reversal. So yeah, pretty much. So with that being said, I made $300 as you can, I mean $3,000 as you can see out of this trade. It was just a 9 points move, and I made $3,000 off of it. Right. So we're gonna jump right into that, basically. Okay. So price was here yesterday. Sorry, I don't have a replay, guys. So price was it gave us an indication coming from the 1 hour, right? So obviously, the 4 hour also consider that we're here also, right? So price gave us an indication to the downside, right? Price gave us an indication to the downside. Price went up to correct price, right? And while price was correcting price came down and then give us a higher low, went back up. As you can see, price kind of went back up, came, was giving higher highs and higher lows, right? This is what was happening on the bigger time frames. So there's nothing you can do about it on what is happening on the bigger time frame. But what you can do is be able to, ensure that there's a correlation between the bigger time frames and the small time frames. Get what I'm saying? Right. So we went down to 15 minutes. So when you go to 15 minutes, as you can see, price broke above this lower high which was made. As you can see, price was giving lower lows and lower highs on the 1 hour. Price made a lower low, a lower high, and a lower low. And price broke above that, gave us an indication to the upside, right? And price came back to correct, and you can see made equal highs at the top and then started to move to the downside until it managed to break below this level. You get what I'm saying? So while price was doing that, price was giving us lower lows and lower highs on the 15-minute chart. As you can see, lower low, and then made a higher high. But then with this higher high, price was also kind of retesting this level in a sense because this was also some sort of a break out, from the higher lows which happened. So price kind of broke out and then price went to the downside. So our trade initially came from this level, you know. So our trade came from this level. So we went down to 5 minutes. Remember, bear in mind that um on the on the 15, right? On the actual the 1 hour time frame, we have price giving us lower lows and lower highs. You get what I'm saying? So with that being said, price went down to the downside, went up also, kind of gave an indication to the up, went down to the 1 hour indication where the indication the 1 hour came from, right? On the 15 minutes, I'm sorry, on the 15 minutes came from, right? And then while price was consolidating, price started to move to the downside, lower low, lower high, lower low, and then made a high high, but then price broke down. So I was looking for any excuse for where price can give me a lower low and a lower high, so I can be able to execute off of that level. You get what I'm saying? So I marked off this lower low, as you can see here. I marked off this lower low, and then I was able to execute off of these two, then I was able to take it to the downside. You get what I'm saying? But I only aim for 1:3s. So I aim for 1:3, this level. So there was my stop loss just above the high lows. Um, sorry, just above the lower highs. My bad. Just above the lower highs. My entry point was here. I had self stop waiting for price to come and open it, and then my 1:3 was just around about here. So price then triggered that, and then gave me my 1:3, and I was out of the market. So after that, market then started to shift to the upside, and then that's the whole movement you kind of had today happening. You get what I'm saying? So pretty much that was the trade. And also, as you can see, there was another one from here where price kind of actually, oh man, my bad. Actually, the trade wasn't on that one. That one was the first one. Yeah, the trade was from here. Oh yes, for the trade was for me because price, I remember, yeah, price broke below this 15-minute lower low where you got the indication, right? Price broke below that, price went up to correct, giving us higher highs and higher lows. Yeah, higher highs and higher lows. And with that being said, price then broke below, gave a lower low and a lower high on 5 minutes. And then I was able to mark the lower low created, and I was waiting for price to give me a lower high. So with that being said, I then had a sell stop waiting below the 5 minute lower low and then 5 minute lower high. So I was waiting for price to come back and trigger that because yeah, I remember once the minute my 1 to 3 hit, price started then to shift back to the upside. That was last night. Yeah, I remember now. So this was that 1 to 3 trade that you see, but it was all in they were all correlating with the 4 hour time frame because on the 4 hour time frame we are still under the 4 hour indication that is happening. This 4 hour indication where price broke a lower low, to give us an indication which is another lower low. So price went up, then we had a shift in market structure, and also on the 1 hour we had that shift in market structure that I was talking about. Price started to break the higher lows and then started to give us lower lows, lower highs. And then price give us a lower low, went up to correct on the 15. As you can see, then I scaled up on the 15. As you can see, price went up to correct on the 15, and then I scaled down to 5 minutes to ensure that everything is correlating. So once price started to break the high lows, which it did break on the 5 minute, price broke a high low because this was a high low. Price was supposed to go up to the upside, so you can continue the trend, which it was on the higher lows. You are supposed to continue that trend on a smaller time frame, like the 5 minutes, to continue, correcting price, but it didn't do this. So we had that market structure shift happening, a higher low and a lower high. So price went to the downside, created a lower low, and then I expected price to obviously go and correct on a smaller time frame. And then this was on the 5 minute. I had myself stop waiting on that lower low created, and I took it to the downside. I didn't want to take it all the way despite because I want to build some good trading habits. So my aim is to actually get a clean 1 to 3 in all of my trades. So I don't want to be going over or above everything. There's no need for me to capture the whole move. You get what I'm saying? There's no need for me to be in all of this happening going down. And I see most of you guys, you falling victim to most of that because now we have the four, like for instance, you have the indication on the 4 hour, right? So you guys more fall for victim for that. We have the indication on the 4 hour and the 1 hour. So according to how it is, you were told that price gave you an indication to downside, price went to correct, and then once you get it, you say you gotta say anything from here you can say. But that's not the case. That's not always the case because now you could have easily got taken out. Your stop loss can be more than what it should be. I mean, this is like what over 40 points stop loss doesn't make sense. You get what I'm saying? So you can go down to the likes of 15 minutes. 15 minutes just ensure that your trends they correspond. So I think I did have an example down here. I'm not sure. Let me see. Okay. So in terms of your entries and how to be able to execute some of those things, you can have the entry model. So I've created this so you guys can be able to, I was teaching this in the Harvard University, the entry models. You get what I'm saying? So we have the entry models in terms of how you can be able to enter a trade. You know what I'm saying? So most of the time you find that when it comes to the time frame that we are using, you have the trends from 4 hour, 1 hour, and 15 minutes. The minute these time frames they're in some sort of correlation, once they can correlate with the movement, like you saw on gold, 4 hour was on a downtrend, 1 hour was on a downtrend, and 15 minutes was on a downtrend, which they were breaking lower lows and lower highs, breaking lower lows and making lower highs. You get what I'm saying? So you just need these to give you a trend, and then you use these for entries. Sometimes you can even include 15 minutes for entries also. You can also now use these for entries. So remember, these for trends and these for entries. So you start from here to there. So you use these to find out where you are and the trend, the overall trend from a higher time frame. Trend and ICC structure. Right? You know what I'm saying? So trends and ICC structure, just to find out where you are. Are you in an indication or a price? Is it correcting or a price is in a continuation? You use that. They have these bigger time frames, 4 hour, 1 hour. You get what I'm saying? Like to find out where you are. And then you can scroll down to 15 minutes to find also a trend on the 15 minute. Also understanding where it is. Is it also, did you see an indication of 15 minute? Is it also in correspondence with this, higher time frame? Is this is bearish and 1 hour is also bearish, 15 minutes bearish. It is much easier for you to be able to get those smaller, nice trades. So same thing also when the higher time frame, like the 4 hour is on a downtrend, price gives you a lower low, an indication price goes up to correct using higher highs, higher lows, a shift in market structure, price give you lower lows and lower highs. This would probably happen in 15 minutes where price would, kind of give you that kind of structure. And also once all of these corresponds, then you can use these to also ensure that they are in a downtrend so you can be able to execute off of those levels. So what you want to do, you want to be able to sell below a level where you got the indication. You don't want to be selling above here. Don't do this. You don't have the money to be able to hold if price bounces off here, creates double bottom, and then bounces to the upside. You don't have the money. So don't do that. You get what I'm saying? Sorry about that. So don't do that, guys. Don't do that. Same thing, price above where the indication you got the indication, you can have a higher high and a higher low. You can take it to the upside. Same thing with the downside. Have a lower low and a lower high. It will be in correspondence with the bigger time frame because now on the bigger time frame, you have a lower low, which was the indication, and price went up to correct and give you a lower high. So when is coming down on a small time frame, like 5 minutes, you will also have a lower low being made on a smaller time frame. And also what you want to see a lower high, not a higher high, a lower high. And your stop loss just above it, and you can take it to the downside. You get what I'm saying? Same thing also here when you have an uptrend on a higher time frame, price would give you a higher high. Sorry about that. Price would give you a higher high, and then price would give you a higher low on a bigger time frame. So you just need to ensure that the smaller time frames, they are also on the same mindset or they're on the same trend. You get what I'm saying? So higher high and then higher low. So they can show you that they indeed are bullish. So this bigger time frame, probably 4 hour, 1 hour, this might be on a 15 minute and 5 minute or 1 minute. But above here, you need a higher high and a higher low. And then above on that high high created, that's where you have your buy stop waiting. And then just below the high lows, you have your sell stop, your stop loss under. You understand? Same here. You have your at the lower low, you have your sell stop waiting. Just above the lower highs, you have your sell stop loss waiting also just above the lower highs. You understand? So this is how you can get those entry models because that's where you got the indication and then price went to correct and now price is continuing to the downside. So that's why I was building up these high highs and high lows from this side and these lower lows and lower highs. So you want to see that kind of structure building up towards your entry levels. You get what I'm saying? So those are the kind of things that you want to see. Um, Obviously, yeah, I see your question. My thoughts on gold right now. Price, like I said, price gave us indication. It then gave us kind of equal lows, as you can see. Let me just zoom in. Price give us indication. We're still under the 4 hour indication, overall indication on the 4 hour. We're still under that. Even on the 1 hour, still under that. But now we are bearish also on the 1 hour and on the on the 1 hour and the 1 hour, as you can see, we also have this indication on the 1 hour where pricing broke below. So the only high that matters from all of this is this actually. I would say from my side, I would say the only high that matters is this high. Why am I saying that? That's where price gave after price was on the upside, it then came all the way from there to give us a new indication. So that's the only high that matters currently. You understand? So let me just delete these. After price gave an indication to the upside, as you saw, just before I deleted this, price gave us a broken lower high, right? And then give us a higher high, right? Kind of give us a higher low and then give us another equal high. So from there, it went all the way down, to give us a lower low to the downside. You get what I'm saying? So if you look at it on the 1 hour, this is how it looks. You see, this is how it looks. It went down to the downside, give you a lower low to the downside. So now is price is still correcting. This is still part of the correction. But in terms of entry wise, I've always spoken about uh, you know, prices where, like I would say like yeah, some places where price has been kind of been, bouncing off. From here, when price was correcting, this led to this high, right? Price from this entry that I had, or that I was showing you, I wanted to see price break below it because price can come and just, bounce off again from this level. You get what I'm saying? So I wanted to see price below that. Same thing with here. Price came almost to the upside. It came and then also to the upside. So I want to see price, as you can see on based on my analysis, I want to see price break below this level where price has been bouncing off of, with a lower low and a lower high. Obviously, there will be a structure coming down on a smaller time frame, the likes of 5 minutes. There will be a structure that will be there. Meanwhile, prices coming to the downside, obviously, you understand? So, but I want to see it break below with a lower low and a lower high, and then I can be able to take that trade. Probably down to the downside. I'm looking at, these lows here that we have on the 1 hour and 15 minute. I'm not gonna look for these ones that we have on the 4 hour, where the indication of the 4 hour ended. I'm just gonna aim for these, or I'm just gonna have my 1:3. But basically, that's a 1:3. That is gonna be there. So it's gonna be a 1:3 there. So I'm not aiming for this 4 hour thing. There's no need for me to do that because price can just time touch this area again and then reverse to the upside and continue, going back to the 4 hour indication. I mean correction, and go correct again into the 4 hour levels before you can continue to the downside. So there's no something that, almost I see most people, they always talk about they know price is gonna do this. You don't know nothing. Let's be clear on that one. We just using past data and, patterns that we see on the market to be able to anticipate where price might go. You don't know if price is gonna do it. So don't make ensure that you save your capital. You don't have, the 100 million to play around with. You don't have, a 4 million stop loss. You don't have the kind of that kind of money. So overall, all in all, protect your money. Ensure that, you have confluences that can be able to protect your money. Things that you can add on in terms of able to protect your money, like this entry model that we did talk about here. This is something that I always teach in the Hustle University. So that's why, these kind of things, why I'm showing you some of you guys these kind of things. But we still have 12 spots left on the Hustle University. We always have, as I can show you, we always have daily sessions. We always have daily sessions. We have we always have London session. Let me show you. Yeah, the Hustle University. We always have London sessions. Let me see. Let me show you. We always have this was today morning. We have a London session, and then we then had today also we also had the New York session that we did, do today. So yeah, New York session also. So we always do that, and also, we have set up that we always talk about, and then the one-on-ones also being available. You can text me on the side. We have the notes that we make in terms of, some of the things. This is not a course. I'm not selling a course, guys. I'm not selling a course. So to some of you who would think I'm selling a course, I'm not selling a course. This is strictly mentorship. The aim is to ensure that you learn how to do this on your own. I don't want you to be dependent on me. That is never the case. So I'm just trading my time for you to be able to use that, and then the knowledge I give you and its lifetime. And some of the things that you will receive on the Hustle University, I'll show you right now. Some of the things that you will receive by being part of the Hustle University. As you can see, it's $99 lifetime access. My master ICC, which is basically price action and market structure, how to build consistency, psychology, and all those kind of things. You understand? Life access, all those lifetime access, and obviously joining a private group with where people have the same mindset, some of the things that you're gonna, understand the price action, structure shift, and directional bias, multi-time frame correlation, same thing that we have been showing you, but on a deeper level. You understand trade management and the mindset. We also have weekly live analysis, like daily, every day we analyze on London, and then on New York also. And then there's also one-on-ones, trade recaps, private community discussions, private personalized sessions, which are the one-on-one sessions. Every, like you can request whenever. So those are the kind of things that, so we're just waiting on only 12 spots left. Like I said, only 12 spots left. And you wanna start doing the ICC mastery course. But I just say ICC because that's what people call it nowadays, but it's just price action and market structure. Like I said, this is the breakout, this is the retest, this is the reversal where price has to, reverse to the upside, continue to reverse. You understand? Because before this uptrend, there was a downtrend. So price is just reversing to the upside. So hence also same thing, before the downtrend, there was an uptrend. So price is just reversing to the downside, which is then a breakout, a retest, a reversal. So those are some of the things that, we can look forward to. Other than that, thank you. If you're new to the channel, please subscribe and don't forget to like and turn on your notifications, guys. And yeah, you have the link down below for the Discord. And then if you want to be part of the Discord, the free Discord, yeah, pretty much. All right. Yeah, thank you, guys. Bye.